For nearly 100 years, the financial world has been waiting for a funeral. The guest of honor, the US dollar. Every decade, prophets of doom stand at the edge of the financial abyss, declaring its reign is over. They said it would die after the Vietnam War. They wrote its obituary when Nixon killed the gold standard. In the 80s, when Japan seemed unstoppable, they swore the yen would be the new king. Then came 2008. Wall Street burned. The global economy teetered. And they all said, this is it. This is the end. And yet, here we are. The dollar isn't just alive, it's thriving. It rules a world that, for all its complaints, simply can't quit it. It's almost poetic, isn't it? The global economy finds ever more creative ways to collapse, and every single time, it falls right back into the arms of the very system that broke it. The story of the US dollar isn't about luck or just raw economic might. It's a story of architecture, an invisible architecture of global power, built brick by brick through wars, crises, and stunningly calculated moves. Because the dollar doesn't just buy stuff, it buys obedience. When we think about financial history, we picture neat charts and graphs. But what if the real story isn't about money at all? What if it's about control? Make no mistake, the dollar is not just a currency. It's a system of allegiance, a soft empire built not on armies, but on contracts, institutions, and a web of trust so deep that even its biggest critics can't live without it. Let's start with a joke that economists love to tell, though it's not really funny. The dollar is our currency, but it's your problem. That line, from U.S. Treasury Secretary John Connally back in 1971, wasn't just arrogance, it was a confession of strategy. Because on that day, when America unpegged the dollar from gold, it started playing a completely different game. No longer tied to a shiny metal in a vault, the dollar became a pure instrument of influence. The world panicked, screaming for stability, and America offered the only solution it truly had: itself. The irony is just perfect. To fix a crisis caused by the dollar, what do you need? More dollars. To protect yourself from American debt, what do you buy? You buy American debt. It's a self-feeding loop, and the entire world is addicted. Look closely, and you'll see the genius soar. Maybe the cruelty of this design. When a country like Argentina collapses, where do investors rush to? When Europe's economy trembles, what do central banks buy? Dollars. When Asia faces a debt crisis, what do they hoard? Just in case. Dollars. Dollars. Even when the United States itself caused the biggest financial crisis in generations, remember 2008, the global demand for dollars actually increased. This is not an accident. It's the purest form of global dependency the modern world has ever seen. What empires used to do with armies and navies, the US now does with liquidity and credit. America doesn't conquer territories anymore. It conquers balance sheets. And yet, if you ask the average economist, they'll still tell you the dollar's dominance is unsustainable. They've been saying that since 1971. It's become a ritual, a way for intellectuals to comfort themselves that someday history will start behaving rationally again. But financial history has never been rational. It's been designed. The secret to the dollar's survival isn't about its own strength. It's about the weakness of everything else. The euro promised unity but delivered bureaucracy. The yen had efficiency but lacked global ambition. The Chinese yuan has power behind it, but it doesn't have trust. And gold, well, you can't fund a government, issue credit, or buy influence at the UN with a pile of metal. So here we are decades later, still asking the same question. Why can't the world just move on? Maybe the truth is too uncomfortable. The dollar isn't a reflection of America's strong economy anymore. It's a reflection of the world's fear. Fear of chows. Fear of instability. Fear of losing the one stable reference point in a system that is too big and too scary to comprehend. Every government knows that to challenge the dollar is to challenge the entire world order. And every central banker, no matter how much they complain, knows the bitter truth. You go in fight the system when your own national reserves are built on it. There's a dark beauty to this paradox. The US runs trillion-dollar deficits, prints money like there is no tomorrow, and exports its inflation to the rest of the world. And what do investors call it? A safe haven. It's as if the world collectively decided that stability doesn't mean strength, it just means familiarity. And the dollar, with all its flaws, is the devil everyone knows. When you strip away all the fancy theories, financial history isn't a tale of progress, it's a story of control. It's about who gets to decide what value even means. And since that decision has been made in Washington and New York. Not because they're the best, but because they designed the game board. Imagine, for just a moment, a world without the dollar. Trade would splinter. Capital would scatter. The very concept of debt would lose its meaning. For decades, economists have dreamed of this post-dollar world, but none of them can actually describe how it would work. Because deep down, Teo Canoe, the fall of the dollar wouldn't just be the fall of America. It would be the collapse of the entire global illusion we call financial order. So, the next time someone tells you the dollar is doomed, just smile. Because the end of the dollar has been just around the corner for half a century, and every time we turn that corner, we just find another reason why the end never comes. Maybe the dollar doesn't survive because it's strong. Maybe it survives because everyone else is weaker. Or perhaps, the real secret is that the world, addicted to the illusion of security, has built a temple around its own chains. And somewhere in that irony lies the true story of financial power. That sometimes, the strongest empire is the one that never has to fight, because everyone else is fighting to protect it for them. Every empire begins with a story, and the empire of the US dollar began with one of the most hypocritical stories in human history. The land that declared independence from imperial tyranny went on to build the most sophisticated financial empire the world had ever seen. No soldiers, no ships, no colonies, just numbers, contracts, and trust. After World War II, as Europe lay in ashes and Asia bled out, America saw not tragedy, but opportunity. The Marshall Plan, take a debt. It a beautiful act of generosity, if you ignored the fine print. Because what the world got wasn't just aid, it got infrastructure for dependency. Each dollar sent overseas was a thread in a global web, a silent agreement that the post-war order would speak one language, trade in one currency, and obey one invisible master. In 1944, at a quiet resort in Bretton Woods, New Hampshire, representatives from 44 nations gathered to rebuild the world. But the real reconstruction wasn't about cities or economies. It was about rules. Who would set them, who would break them, and who would profit from enforcing them. There, behind polished wooden tables and polite smiles, the United States rewrote financial history. The dollar would be the anchor, tied to gold at $35 an ounce, while every other currency would tie itself to the dollar. It sounded fair, logical, stable. But beneath the rhetoric of cooperation was something much more profound. The creation of a financial monarchy where the throne sat in Washington. Gold may have been the symbol, but control was the substance. And while the rest of the world measured wealth in ounces, the United States measured it in influence. It was a masterstroke, not an empire of conquest, but an empire of consent. Nations chose to depend on the dollar. They chose to hold it, to use it, to build their reserves in it. And by choosing it, they surrendered something far more valuable than gold. Sovereignty. The brilliance of the Bretton Woods system was that it disguised domination as cooperation. The IMF and World Bank became temples of this new order, preaching discipline, stability, and reform. As long as reform looked suspiciously like obedience. If you wanted aid, you played by the rules. If you wanted loans, you opened your markets. And if you wanted a seat at the table, you accepted that the table itself was owned by the United States. For a while, it worked perfectly. The dollar became the bloodstream of global trade, and the Federal Reserve the heart that pumped it. Europe rebuilt, Japan industrialized. The free world prospered, and in every corner of that prosperity was a small, unspoken truth. You could only move forward if the dollar moved first. But as with all empires, the seeds of arrogance began to sprout early. By the 1960s, America was spending more abroad than it earned. printing more dollars than it could back with gold. Foreign central banks started to notice the illusion. The math didn't add up. And when Charles de Gaulle demanded gold instead of paper, it was like pulling the curtain back from the great financial wizard. Then came 1971. Nixon, standing before the cameras, announced that the United States would temporarily suspend the dollar's convertibility to gold. Temporarily, of course, meant forever. The gold standard died that day, but the empire didn't. It evolved. Here lies the paradox of financial history. The moment the dollar should have fallen, it ascended higher than ever. Freed from the weight of gold, it became a god of pure belief. And belief, as every empire knows, is far more powerful than metal. After 1971, the U.S. didn't need to control gold. It controlled the idea of value itself. Petrodollars became the new gold. With Saudi Arabia's quiet agreement, oil was priced and sold exclusively in U.S. dollars, binding every energy-dependent nation to the American monetary system. It was a silent coup, conducted not with armies, but with oil rigs and central bank memos. From that point on, the empire no longer needed permission. It didn't need the IMF to force compliance or NATO to enforce order. The world's appetite for energy guaranteed that dollars would flow endlessly, predictably, and under Washington's gaze. And so, what began as a post-war promise of stability became a machine of control. Every crisis, every war, every boom and bust, all roads led back to the same currency, the Samdebd, the same invisible center of power. Here's where the irony cuts deepest. The world kept calling America the leader of the free market. But what it really built was a monopoly, the most refined, elegant monopoly in human history. Because unlike past empires, America didn't conquer through force. It simply convinced everyone else that no other system could survive. The Soviet Union tried to resist it and collapsed. Europe tried to rival it with the euro and fractured under debt. China tries to undermine it now, yet keeps its reserves, conveniently in U.S. Treasury bonds. The U.S. learned something the British Empire never could. That true power doesn't come from holding land. It comes from holding liquidity. But let's not romanticize it. The system America built is not stable. It's self-consuming. Each crisis it survives only feeds the illusion that it's immortal. Each bailout, each inflation wave, each geopolitical tremor only reinforces the idea that the dollar can outlast everything, even its own creators. The truth is simpler and darker. The dollar survives not because it is unbreakable, but because the world has nowhere else to run. The empire persists, not because it's virtuous, but because it's necessary. And so, as we watch the 21st century unfold, with wars of trade, debt, and data, we're not seeing the end of the American empire. We're watching its next metamorphosis. From a currency to a code, from gold to trust, from belief to algorithm. Financial history has always been about adaptation, and, no, empire, financial or otherwise, has adapted quite like the one built on the green paper that once promised gold, and now demands faith. The world may whisper of the dollar's downfall, but the silence of alternatives is deafening. And until someone builds a new system strong enough to replace it, the US dollar will keep doing what all empires do best. Pretend it's just a servant of trade, while quietly ruling the world. Power, in the modern age, no longer wears a crown or commands an army. It signs checks, sets interest rates, and writes recommendations that move trillions overnight. If the 20th century had kings and generals, the 21st century has central bankers and economists, monarchs in suits, ruling with equations instead of swords. But to understand how the US dollar became the unchallenged ruler of global finance, you must understand not its story, but its mechanics. Because empires, whether of gold or paper, live and die by systems, not slogans. And America built the most intricate system of them all. A web of debt, liquidity, and influence so deeply entangled that even those trapped within it believe its freedom. It begins, as always, with trust, the most fragile commodity in financial history. The dollar, after 1971, no longer represented anything tangible. It became a promise, and promises, in the right hands, can be monetized. The Federal Reserve, once a quiet institution of academic restraint, evolved into the high priesthood of this new religion. Its interest rate decisions became scripture, its press conferences, rituals of reassurance, and its balance sheet, a black hole that absorbs crises and spits out liquidity. When the world trembles, when markets panic, when nations default, there is one reflex left. Run to the dollar, not because it is pure, but because it is powerful. Because in the empire of trust, survival is defined by proximity to the issuer of faith. Let's be honest, this isn't economics. It's psychology weaponized. The entire global system functions on one shared delusion: that U.S. debt is risk-free, that somehow a nation running trillion-dollar deficits can borrow indefinitely and still be the standard of stability. And yet, it works, because everyone else plays along. Europe hides its instability behind bureaucratic fog. Japan buries its stagnation beneath zero interest rates. China's rise depends on exports that are, ironically, priced in dollars. It's a global theater of dependency, each player pretending autonomy while orbiting the same gravitational center. The Federal Reserve's policy decisions. Behind this elegant chaos lies a mechanism so subtle it feels invisible. The dollar funding system. Every international transaction, every oil deal, every loan between nations, it passes through the dollar's bloodstream. And that bloodstream is managed not by governments, but by private banks acting as arteries of American influence, through institutions like SWIFT, through correspondent banking, through the almighty clearinghouses of New York. The U.S. doesn't just monitor global finance, it owns it. The illusion of neutrality masks a structure where the right to transact is conditional. If Washington doesn't like your regime, your bank, your policy, the switch can be flipped. Ask Iran, ask Venezuela, ask Russia. In a world where money itself moves through American pipelines, sanctions are not tools of diplomacy. They are weapons of compliance. The brilliance and cruelty of this system lies in its subtlety. The dollar doesn't have to dominate openly. It dominates functionally. Every central bank holds U.S. treasuries because they must. Every corporation settles in dollars because the alternatives are slower, riskier, more expensive. And so the empire expands without marching a single soldier. Every transaction is a pledge of loyalty. Every reserve balance, a quiet admission of subservience. The most powerful empires in history controlled territory. This one controls infrastructure, the digital arteries through which modern civilization breathes. Of course, such control requires careful maintenance. When crises erupt, the Asian financial crisis, the 2008 meltdown, the COVID crash, the Federal Reserve performs the same miracle every time. It becomes the world's lender of last resort. Dollar swap lines open, liquidity floods across oceans, and nations sigh in relief. But beneath that relief is dependency. Each crisis strengthens the addiction. Each bailout deepens the belief that only one currency, one system, one empire can save the world from its own excesses. In a way, the U.S. has mastered the art of controlled instability. It allows crises to happen and then rescues the world from them, reinforcing its indispensability. It's not chaos by accident. It's chaos as strategy. Consider 2008, the so-called global financial crisis. A meltdown born in America. Mortgage markets spread like wildfire across the planet. Banks failed, currencies collapsed, and economies froze. But who emerged stronger? Not Europe, not Asia. The dollar. Because when the dust settled, the world needed liquidity, and there was only one source. The very system that caused the collapse became the system that saved it. It was financial alchemy, turning disaster into dominance. The Fed's quantitative easing, its infinite printing press, was sold as a rescue operation. In truth, it was a declaration. We can create money without consequence, and you will still call it safe. This is how empires survive in the modern age, not through force, but through necessity. The world can complain about the dollar's dominance all it wants, yet every time uncertainty rises, demand for dollars surges. It's a paradox worthy of history's greatest ironies. The more reckless America becomes with its finances, the more the world clings to its currency. It's as if global markets have entered an abusive relationship they cannot leave. Even the architects of alternatives, the BRICS alliance, the yuan traders, the euro idealists, remain trapped in the same paradox. Their reserves, their trade invoices, their safety nets, all dollar-denominated. It's not a conspiracy, it's inertia, the kind that only a century of financial history can create. But the real mechanism of control lies deeper, almost invisible. The narrative. Every empire needs a story to justify its rule. And America's story is genius in its simplicity. It doesn't claim divine right. It claims competence. It presents itself as the manager of global order, the guardian of free markets, the protector of financial history's stability. Every IMF report, every World Bank projection, every G7 statement, they all repeat the same refrain. The system may be imperfect, but it is the best we have. Translation: don't question the throne. The brilliance of the American financial empire isn't that it censors dissent. It absorbs. Italiano. It allows critique, encourages alternatives, even Funstein, because it knows none can escape its architecture. So, RER in the 21st century. Surrounded by digital money, decentralized dreams, and blockchain promises. And yet, the dollar remains untouchable. Bitcoin may rage, the yuan may rise, the euro may wobble, but every time volatility strikes, capital runs back to the same place. The safety of the empire. That's the beauty and the tragedy of modern financial history. Freedom is an illusion, stability a contract, and value a belief system enforced by screens in Manhattan, and the mechanics that sustain it. Simple, elegant, terrifyingly efficient. A cycle of debt, trust, and dependency that renews itself every generation. So when historians write of this era centuries from now, they won't describe the US dollar as a currency. They'll describe it as a structure, a global nervous system wired to one brain, pulsing with invisible obedience. Not the Empire of Rome, not the Empire of Britain, but the Empire of liquidity. And like all empires, it will claim it acts in the world's best interest. It will say its control brings stability. And perhaps, in a cruel twist of truth, it does. Because in a system built on illusion, sometimes the illusion is all that holds it together. Every empire needs an architecture, not of stone and marble, but of institutions, agreements, and illusions. The United States built its empire not with cathedrals or palaces, but with central banks, reserve systems, and a global network of trusted partners. This wasn't an accident of history. It was an engineering project so meticulous, so invisible, that even conquered nations came to defend it as their own. So, how did this happen? How did one nation build a system of control so subtle that obedience feels like a choice? Let's explore the architecture of financial control. It all started in the ashes of World War II. Europe lay shattered, its economies crippled. Amidst the chaos, the US dollar gleamed as the only stable currency left standing. This was the moment. In 1944, the Bretton Woods Conference was not just a diplomatic summit, it was the foundation ceremony for a new financial empire. Under the guise of cooperation, the United States established two powerful pillars: the International Monetary Fund, or IMF, and the World Bank. The logic was beautifully cynical. Instead of sending governors to rule colonies, the US would send advisors. Instead of imposing taxes, it would offer loans. Nations in financial distress would be helped, but only after signing contracts that quietly surrendered their economic autonomy. And the dollar, naturally, became the currency of aid, of trade, and of hope. It was benevolence wrapped in steel. By tying global finance to the dollar, Washington created a gravitational pull so powerful that no nation could fully escape it. The IMF's conditional loans were designed to stabilize economies, which often meant forcing countries to cut social spending, devalue their local currencies, and open their markets to foreign capital. Conveniently, these measures made nations even more dependent on US financial institutions. It was a masterclass in control, disguised as compassion. And then there's the Federal Reserve, the unseen brain of this empire. To outsiders, it just looks like a normal central bank. To insiders, it's the instrument through which America projects its influence across oceans. When the Fed raises interest rates, entire nations tremble. When it prints dollars, the world inflates in unison. This is monetary diplomacy at its purest war by other means. The 1970s added a brilliant new layer to this architecture: the petrodollar system. When President Nixon abandoned the gold standard in 1971, many predicted the dollar would collapse. But instead, it mutated. The U.S. struck secret deals with Saudi Arabia, ensuring that oil, the world's most vital commodity, would only be sold in dollars. Think about that. Every nation that needed energy now needed dollars. And every dollar spent on oil eventually cycled back into American banks. This elegant and ruthless loop ensured that the dollar would remain indispensable long after gold lost its shine. By the 1980s and 90s, this system had evolved into a form of financial feudalism. Nations no longer fought wars over territory. They fought over access to credit, interest rates, and capital flows. Wall Street replaced the battlefield, and hedge funds became armies. When a developing country defaulted, it wasn't invaded, it was restructured. When it resisted privatization, its bonds were downgraded. The architecture of control was complete. An empire without soldiers, maintained through debt instead of swords. Of course, all empires face challengers. Japan's economic miracle in the 1980s was a serious threat. Its corporations were buying up landmarks in New York, and its banks were expanding aggressively. But then came the 1991 asset bubble collapse, a financial implosion that suspiciously coincided with Washington's subtle pressure for a stronger yen. The lost decade that followed made sure Japan would remain a subordinate partner in the dollar system. The European Union tried to build its own fortress with the euro, but its structure was fragile. The euro lacked a single, unified fiscal authority. During the 2008 financial crisis, this flaw was brutally exposed. The European Central Bank was powerful, yes, but not fully sovereign. In moments of crisis, the continent still looked to the U.S. Federal Reserve for dollar liquidity. The master and its rivals remained intertwined in architectural marvel of dependence. Now, what about China? China studied the blueprint and decided to build its own version. The creation of the Asian Infrastructure Investment Bank and the Belt and Road Initiative are not acts of rebellion, but imitation. Beijing understood that the key to dominance isn't armies or ideology, but shaping the flow of credit. Yet, even as China lends billions across Asia, Africa, and Latin America, it hasn't been able to dethrone the dollar. The U.S. financial architecture is just too entrenched, too deeply wired into the global systems of trade, debt, and trust. The incredible irony here is that this entire structure is built on something intangible. Faith. Faith that the dollar will remain stable. Faith that the United States will always honor its debts. Faith that the system itself is simply too big to fail. When Wall Street nearly collapsed in 2008, this faith was pushed to its absolute limit. And yet, miraculously, it held. The very nations that suffered from America's reckless banking crises still rushed to buy U.S. Treasury bonds. It was as if the world had decided that the arsonist was also the only reliable fireman. Look at the history of modern economic crises. Behind every collapse, a blueprint of control was waiting to rebuild the world in America's image. The Latin American debt crisis, the Asian financial crisis, the European sovereign debt turmoil, all of them became laboratories where the architecture of financial dominance was reinforced, not weakened. Each bailout deepened the world's reliance on the dollar, and each restructuring reaffirmed the United States as the global banker of last resort. To understand this, architecture is to see the empire not as a grand conspiracy, but as a kind of inevitability. The global economy needed stability, and America offered it at a price. The dollar became both a lifeboat and a leash. Nations clung to it for survival, even as it bound them tighter. The system has endured not through force, but through a strange kind of consent. And yet, beneath this gleaming structure lies a silent fragility. The same mechanisms that sustain the dollar supremacy also make it vulnerable. A debt-based empire thrives only as long as faith persists. The moment that faith falters, another nation, or perhaps a new digital alternative, captures the world's trust, the architecture may begin to crack. But for now, the fortress stands. Its pillars, the IMF, the World Bank, the Federal Reserve, the petrodollar remain. The marble may have aged, the facade may have chipped, but the design endures. The world may curse the empire's arrogance, yet it still banks in its currency. And that is the ultimate triumph of architecture. When the structure becomes invisible, and obedience feels like your own choice. Empires used to be defined by borders, armies, and flags fluttering in the wind. You could point to them on a map. You could conquer or escape them. But the empire of the dollar, the most enduring of all, exists everywhere and nowhere at once. It doesn't need land to rule, nor soldiers to enforce its will. Its minion lives quietly, invisibly, inside every transaction that moves through the veins of the global economy. Think about it. A barrel of oil sold in Saudi Arabia, a cargo ship docked in Singapore, a microchip exported from Taiwan, a loan approved in Nairobi. Each act, mundane on the surface, pays silent tribute to the same sovereign power. The United States dollar. This is a form of obedience so complete that it no longer feels like obedience at all. The empire doesn't demand worship. It collects it effortlessly through habit, convenience, and sheer necessity. This is the ultimate victory of financial history. The transformation of domination into routine. Every time a nation trades in dollars, it reinforces the very system that governs it. Every time a corporation stores its reserves in U.S. Treasury bonds, it lends oxygen to the empire's lungs. And every time a citizen of another country measures their own wealth in dollar terms, they whisper allegiance to a flag they may never salute. The true power of the dollar was never printed on paper. It doesn't lie in the ink, or the signatures, or even the numbers glowing on a digital screen. It lives in something far more abstract. Faith. Faith that the dollar will hold its value tomorrow. Faith that others will continue to accept it. Faith that behind it all stands a nation so formidable that its collapse seems almost unimaginable. This faith, of course, isn't an accident. It has been cultivated through decades of political leverage, military presence, and economic narrative. The story of the dollar isn't just a story of finance. It's a story of psychology. It's a collective belief, nurtured generation after generation, that no matter how turbulent the world becomes, the dollar remains the last safe harbor. Ironically, this faith endures even as the reasons to doubt it are piling up. The U.S. national debt now exceeds the size of its entire economy. The Federal Reserve's printing presses have redefined the meaning of limitless. Yet, the more dollars that flood the world, the stronger the illusion seems to become. Why? Because the world simply cannot afford to question the dollar. To do so would unravel the very fabric of its own stability. This is the paradox of modern power. Dependence disguised as choice. Nations that publicly criticize American dominance still hoard U.S. reserves in private. Governments that dream of de-dollarization continue to measure trade, debt, and wealth in the same currency they wish to escape. The architecture built at Bretton Woods, refined by the IMF, fortified by and guarded by Wall Street, has proven too intricate to dismantle. Just consider the alternatives. The euro, often fragile and fragmented, struggles under the weight of its own bureaucracy. The Chinese yuan, bound by state control and political opacity, simply can't command global trust. Even digital currencies, heralded as the future, remain tethered to the very financial systems they claim to disrupt. The world keeps searching for an exit, but every door seems to lead back to the same room, with the same currency waiting at the center. The more that nations resist, the deeper they're drawn into the network. The moment they trade oil, borrow credit, or hedge risk, they re-entered the empire's orbit. America no longer needs to enforce its dominance. It merely maintains the infrastructure that everyone else depends on. The global banking system, the SWIFT network, the clearinghouses, the rating agencies. Each one acts as an invisible border patrol for the dollar's realm. The result is a form of control so elegant, it feels almost natural. When a crisis erupts, a war, a market crash, a pandemic, what is the instinctive global response? to flee into dollars. Safety, in the modern age, has been monetized, and the price of that safety is submission. The consequences are profound, because every economy is tied to the dollar. No economy is truly sovereign. Central banks from London to Lagos must watch the Federal Reserve as though it were their own. A single rate hike in Washington can send currencies crashing on the other side of the world. A decision made by a handful of people can rewrite the destinies of millions far beyond its borders. This isn't merely influence, it is global choreography. The US has managed to turn its domestic policy into the world's problem, and the world's wealth into its insurance. It's a closed system, a snake devouring its own tail, feeding endlessly on confidence. As long as the world believes, the empire survives, and the world must believe, because disbelief would mean chaos. Every credit card swipe, every international remittance, every shipping invoice day are the empire's heartbeat. No monument marks its existence. No anthem announces its glory. Its temple is the marketplace. Its priests are bankers. Its doctrine is stability at any cost. And yet, like all empires, this one carries within it the seeds of its own undoing. Faith, once absolute, can fracture. The same networks that bind the world to the dollar can someday transmit rebellion just as swiftly. The question is not whether the empire can fall, but whether the world can survive its collapse. For now, no one dares to find out, because despite the rhetoric, despite the alternatives, despite the mounting debt and shifting alliances, the truth remains brutally simple. There is no replacement. The dollar endures, not because it deserves to, but because no one has built a system strong enough to take its place. And so, every single day, the empire breathes quietly, rhythmically, through the pulse of global trade. It lives in the contracts for oil, in the ledgers of banks, in the calculations of hedge funds. It lives in the dreams of nations aspiring to wealth, and in the fears of those who have already found it. The empire doesn't need walls or armies anymore. It exists inside the code of the world's financial software, inside the policies of central banks, inside the language of economics itself. It has transcended geography, morality, and even politics. It's not just America's system, it has become humanity's default. In the end, the dollar's throne is not made of gold or paper, but of faith. A collective belief stronger than any treaty, mightier than any army, and more universal than any law. As long as the world trades, as long as debts are owed, as long as wealth seeks safety, the empire will remain unseen, unchallenged, alive in every transaction, because the truth is simple, devastating, and undeniable. The world doesn't use the dollar because it's strong. It's strong because the world has no other choice.